How we doing? How we doing? Gonna try and make this video nice, quick, and easy today. Keep it 10 minutes and under. We're gonna get straight to it and go when to take profits. Obviously, we need our when, why, and where narrative. Taking profits can obviously be very difficult, along with knowing when to go break even. Here's a detailed look into my approach. Time of day is always considered for how it aligns within the market sessions and the volatility. For example, I may hold longer during high volume periods such as the New York Open, and or I may close my trade or go break even depending on what the opening of the New York session is showing me. Market conditions will also give me higher or lower conviction trades based on strong setups. Significant news events might warrant holding for longer moves. Also, daily candles such as Tuesday, Wednesday, or Thursday will warrant me holding longer moves. Taking profits with inside the range at the opposing OTE following turtle soup logic and an entry will always grant you a good break even in profit taking. However, I don't always like going break even because we haven't broke out of the other end of the range. And if it is a clear turtle soup, we will draw to the high or the key high or the key low. Put it here, equilibrium for beginners. The equilibrium of the range is damn near guaranteed every time following the turtle soup sequence. Sell side or buy side liquidity. For trades with higher conviction, I aim to take profit at key liquidity levels such as sell side or buy side liquidity with our key obvious highs or lows to maximize risk reward, or my risk to reward, which is RR. I take profits to reduce risk at key levels and to help lock in gains and reduce exposure to market reversals. We'll go over a good ideal and just trade setup to look at that I took to understand why, where, and when you should take profits at what certain key highs and what certain key lows. I never move my stop loss past one tick in profit due to commissions. I always keep it at break even and never pull it into I never pull my stop into profit until my first take profit is hit, and I don't move it to break even until my first take profit is hit. And I never move it, I want to clarify, I never move it to stop some profit. This avoids over managing your stops, and consistently pulling your stops to every swing high or low can prevent you from catching the entire move, because obviously we can soup every high or low. It's important to allow the trade, I don't know why I keep stuttering. It's important to allow the trade room to breathe. Special considerations are SMTs at key liquidity levels. I often take a little bit of profits if we form an SMT at a key level, depending on my conviction regarding liquidity pool. A lot of traders also find that it's very mentally involving to move your stop and profit, or just even trade in general, and constantly move your stop loss. If you have your original stop loss for invalidation and you pull it to break even after you hit your first first take profit, and you don't touch it, there's no mental involvement involved, right? If you're if you think one mini's too much to go up 400 ticks and come back break even, go in micros. Considering on, you want to maintain a high R, and having a good RR does not justify breaking your rules or settling for lower RR trades. The goal is to achieve the highest possible while not lowering your win rate to get a higher RR. Obviously, I have trades where I'll re-enter, but it's in more of a discount or premium of the price leg that I'm looking to reach, or the opposing price leg that I'm looking to reach. You should aim for at least a 60 to 70. 50 is perfectly fine as long as you have over a 5 RR. 60 to 70, you should have around a 3. Achieving an 80% with a 3RR is very, very possible, and way past that is very possible. Let's hop into the chart to show right where and why and when you should take profits. Looking at the chart, in this piece of price action, right, coming in to OTE of our previous swing high and swing low, after putting in a protected low and turtle souping, right, are open, right, due to swing lower into continuation. With this Monday high put in place, right, or excuse me, I don't know why I put it there, right, with our Monday high put in place, we know this high has to be ran coming into Tuesday if we want to run lower, especially coming into an Asian accumulation session inside of our range, right? We see London manipulate into the 330, create that low, that high resistance low, and react higher, right? And you don't wait for this, right, to long, coming into the body, right? We create the breaker here, accumulate, sweep internal, head external, right? And even here, right, we sweep external, head to internal with the order block here, and then head higher, right? And even if we, induce the liquidity above this high here and then run it one more time, right, that could just be, retracements in engineering liquidity here, here, right, and here, right, for us to move lower. Obviously, after we break this high, we're not just looking to turtle soup this high just because, we did have, this obvious draw for these equal highs. Price does not need to reach there, which we saw and we went over, right? We do have the order block as a key level, and we have 2 taps to the key PD array in a market maker sell model, right? And we did sweep these lows. That's why we, had mine after the Monday low with the INWOG and sweeping into the INWOG, turtle souping into the INWOG, that we delivered higher coming into Tuesday, right? Go ahead and delete that since I moved it. And coming into Tuesday, we know Monday has to be ran to either one, sweep higher, then run lower, or not sweep the highs, but right, expand through the highs, fair value gap, accumulate, right, sweep, and then move higher. What we don't do is reaccumulate above the high. We aggressively come back into the range and create what is seen to be a breaker, right? Higher high, lower low, swing high. So after we see this and that new lower low created with displacement and the close of the 4-hour, this key high that we used as wanting to be an expansion high is now a turtle souped high. Delivering from this into Wednesday, it puts in our Tuesday high of week. And even if, right, we have the idea that we may expand, right, from the INWOG again, right, because that has happened and it can happen. After we, one, break the low with displacement, like we see here and here, not a turtle souping displacement, right, we know that our draw is now this low. So we don't turtle soup this low, right, we break it with speed. Same for this low. But it's not just, hey, we sweep that low, right? Here, right? Obviously we have the higher time frame fair value gap, but right, withdraw on liquidity and right, our failure swings, we then spool to the low. Following order flow, right, our higher time frame chart and our weekly profiles into our daily profiles. Following right with a Wednesday expansion day. And that's how, right, when you should understand, right, based on liquidity, market structure, time, right, and price, when, where, and why you should take your profits. I hope you enjoyed the video. Leave a like and a subscription and comment on the video if you did. And let me know where I can improve and if the video did help you out. And also, one thing we also see again here before I do head out, right after we break the low, we reaccumulate. right? IOFED, and then move lower. Key signs that we're going to continue taking out this low. And like I said, subscribe, like, and comment for more. Y'all have a great day.